Hey, this is Jerome with Common Sense Consulting LLC, back for another episode. So today, this is episode number 2, and we're going to talk about tax jargon today. So what we want to talk about is some of the language that you'll hear, some of the most common terms that you'll hear during tax season, just to kind of give you a little understanding of what they mean. So when you hear it, you'll know, have an idea of what's going on. It's not gonna be but, maybe 4 or 5 terms. These are just the basic ones that you'll hear. So the first term we wanna talk about is adjusted gross income, or AGI. A lot of times you'll hear people just say AGI, but it means adjusted gross income, and it's defined as the total income minus any deductions or adjustments, to your income that you're eligible to take. So your gross income is basically your wages that you receive from your employer, dividends, capital gains, business or retirement income, as well as all other forms of income. So that's basically what gross income is. Um, it can also be other forms of income like tips, rental income, interest on stocks, dividends, things like that. Just basically all forms of income that you receive during the tax year. Adjustments to that income are, the deductions that reduce the total income to arrive at your adjusted gross income. So some examples of adjustments can include, but not limited to, half of the self-employment tax you pay, self-employment health insurance premiums, uh, contributions to certain retirement accounts, your IRAs, 401ks, any kind of student loan interest, educator expenses, and so on. There's quite a few, too many to list right now. But basically, when you take your gross income, which is all of the income you receive, and you would take those adjustments out of it. That's why they call it adjusted gross income. So that's what it means. It's not that complicated, fairly simple. Um, um, Another couple of terms that you're going to hear is deduction, standard deduction, itemized deduction. So what's standard? What's itemized? So standard deduction basically means is depending on the filing status that you file with, whether it's single, head of household, married filing single, married filing jointly, or qualified surviving spouse, there's a certain dollar figure that the government has set that you can use to offset your income. So that's basically what the standard deduction is. Not going to list those figures here, but that's basically what that is. Itemized deductions are deductions that you use like on a Schedule A, you know, um, whether it's home mortgage interest, uh, business interest, medical expenses. Um, there's other expenses that you can use basically. And you put those on that sheet and it gives you a total of your itemized deductions. Now, if your itemized deductions are more than the standard deduction, you will want to itemize. Because basically, what you want to do is figure out both ways, and because that's what I'll tell people: figure out both methods, find out what your standard deduction is, and then find out what your itemized deductions are. If your itemized deductions are more than the standard, then you want to go with the itemized deductions because you're going to get more money off your income, and it's going to lower your tax basis. So figure out which one works better for you, itemized versus standard, and then use the one that's gonna give you the most reduction, which is gonna lower your tax basis. Next thing we're gonna talk about is credits versus deductions. So tax credit versus tax deduction. Now, tax deduction actually lowers your taxable income. So um, versus a tax credit, which lowers your tax bill rather than your taxable income. So, if a person receives a tax deduction, that decreases the amount of their income, which lowers the taxable income, which lowers your tax bill. On the other hand, a tax credit reduces the tax bill, what you're going to owe in taxes versus your taxable income. So let me give you just a brief example of what that means. So, say a person has a salary of $100,000 a year, they have a $10,000 deduction. So, the taxable income will now be $90,000 because you have that $100,000, then you take the $10,000 deduction, and that makes your taxable income $90,000. You tax them if the say their tax rate is 25%, that's going to make their tax bill 22,500 for the year. Now, say that same person who makes $100,000 a year has a $10,000 tax credit instead of a deduction, a tax credit. And they're going to get taxed at the same 25% of that $100,000 income. They're going to owe $25,000 in taxes. So when they take that $10,000 credit off of the $25,000 in taxes, now they only owe $15,000 in taxes. So you see how that works? The deduction lowered the income from 100 to 90, and then they were taxed on the 90, whereas the credit, they were still taxed 25% of the 100,000, which gave them 25,000 in taxes, but the credit took $10,000 off the taxes that they're owed. So that's the difference. Tax deduction lowers your taxable income, tax credit lowers the tax bill. So hope that's kind of I hope you kind of understand what that means. Now, with tax credits, there are tax credits that are refundable, but there are tax credits that are non-refundable. And most credits um, are non-refundable. There are some that are refundable, but most of them are not. Um, so, what a refundable tax credit does is that credit will go against your tax bill. And if you have an excess of tax credits after taking them against your tax bill, then you get those in the form of a tax refund. Where a non refundable credit means you just reduce your tax bill. If there's any excess of tax credits, they just go away. You lose those. So, a brief example of that is say a person owes, excuse me, say a person owes $2,000 in taxes, but they receive $3,000 in non-refundable credits. Well, that just means they erase their tax bill. They don't owe anything, but they won't get anything back. But say that same person who owes $2,000 in taxes gets a $3,000 refundable tax credit. That means that person gets $1,000 tax refund. So you see the difference? Refundable credit means you get that back if the credits are in excess of what your taxes are owed. A non-refundable credit means you just erase your tax bill. So some common tax credits for individuals include the child tax credit, earned income tax credit, credit for other dependents, adoption credit, American Opportunity, and Lifetime Learning Credit. Those are educational credits. So those are just some of the credits, and now you hopefully you understand the difference between refundable, non-refundable credits versus tax credits versus tax deductions. So um, the last thing I want to go over is forms, some basic forms that you'll hear about during this tax season. The main form you're going to hear about is the W 2. The W 2 is the form you'll receive from your employer that basically shows your income and your taxes that were withheld. Um, it's basically just that simple. If you have a job, you should be expecting to get one. They are normally, um, the employers have till January 31st to get those out to you. So some are fast, they get them out to you fairly quickly. Um, some places actually allow you to access them digitally, where some you may have actually have to wait for them to come in the mail. Let's see. The next form are 1099s. So 1099s are basically forms that show income from freelance workers, people that do side hustles, gig workers, independent contractors. You'll also receive 1099s if you receive unemployment insurance, if you have gambling winnings. Let's see what else. Dividends, incomes. There's many forms of 1099s, but depending on where you may have income coming from is what form you may receive. And then the main filing form for your taxes is the 1040. There's different versions of the 1040. There's 1040 EZ, which is simple as it sounds, 1040 Easy. It's a simple form that you'll use when you use the standard deduction. You don't have anything to itemize. So you use a standard deduction, you'll list your income on there, and basically it's simple one or maybe two-page uh, form. Uh, Fairly simple. It's usually used by if you have little income, no deductions. A lot of young people use those. Older people use those because they don't have a lot of deductions, and single people use those. So that's mainly people that use the 1040 easy. Then you have your main 1040 A, which most people will use if you have um, you want to itemize or you have expenses, medical expenses, home mortgages, things of that nature that you'll need to kind of itemize your deductions. Then you have the 1040X, which you use to amend your tax return. So, say you file your tax return this year, later on in the year, you get a late W 2 or you get some 1099s, or discover you have some deductions or credits that wasn't taken. You can use the 1040X to amend your tax return and claim those credits, or you can use it to add in the income that you found out that you had coming. Okay. And there's some other forms of 1040s, but we're not going to go into those right now. But the main ones you're going to deal with is either the 1040 Easy, 1040A, or 1040X. Those are kind of the basic 1040s that you'll use. So hopefully, you got a little better understanding of some of the forms that you'll use, some of the basic uh, jargon as far as credits versus deductions, refundable credits versus non-refundable credits, itemized versus standard deductions, and gross income versus adjusted gross income. So hopefully this helps you out just a little bit. If you have any questions, or if you feel like this is tax season a little too much for you, you don't want to have to deal with it, just reach out to me. I can help you with that. I can take care of everything for you. Fill out your taxes, get them e-filed for you. All you have to do is sit back and wait, hopefully, for your refund. We'll take care of all that for you. But if there's any topics that you want discussed or something you want me to go further into detail with, just leave me a comment below the video and I'll be happy to make a video about it for you. Or if you need to talk to me or speak to me directly, reach out to me and then I'll get back with you and we'll go further that way. All right, everybody. So enjoy the rest of your day. Hopefully this helps. Look out for video number 3, episode number 3 coming soon. And I'll talk to you guys later. All right. Bye now.